It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Guys, Lee has been on holiday the past week for his birthday, traveling Europe. So you can blame him in the comments for the delay in getting a new video out to you guys. Our next video will be out Sunday. So be sure to subscribe so you get these updates and tick the notification bell as well. And if it's not too much trouble, go ahead and hit the thumbs up button if you like this content. Guys, in this video, we'll be talking about 6K on the S&P. We'll be talking about 100K on Bitcoin. We'll be talking about 20,000 on the DAX and a couple other assets like gold as well. I'll give you these blow off top targets and I'll show them to you in the charts. But I wanted to start off the video because you guys know the next 60 days in particular, I expect a lot of volatility. We have the September 18th rate cut coming up, which I expect to lift all the assets in a euphoric rise, just like in the GFC cycle, moving up to new all-time highs. I expect this to happen in equities and in crypto as well. Guys, I was going to play some Bloomberg clips for you because it's been a week since we made the last video, but you already know what they're going to say, right? I could put the money managers on and they're going to tell you, well, you know, the economy's slowing down. This is what we wanted to see, right? But unemployment's at a historic low. The economy, the GDP is lower, but it's still strong. It's still robust. And so we see more upside ahead. You want to be long this market. So I can play you those clips, but they all say the same thing. I thought it would be more interesting to share the crash up theory with you. Now, in equities, I'll have Patrick Bet-David introduce this. He was talking about this on his Valuetainment channel over a year ago because this happened in Venezuela. But Lee, roll this clip.
Does this mean recession is going to come here? Like I told you earlier when we were talking, my bigger fear is a reverse market crash, which Venezuela just went through, which all of a sudden the rates get lowered and Dow and S&P goes. And Dow goes from 33, 40, 45, 50, 55, 60, just goes boom.
So Patrick Bet-David, PBD, is talking about his biggest fear is that we go to cut interest rates and then the market just takes off. And I mean, I agree with that. That's what's going to happen initially. That's the blow off top, right? But in like Venezuela, it kept going up. The thing is, you know, if you understand economics and specifically in trading, and you look at some economists like Minsky, talks about when you have a parabolic rise, you have a parabolic fall. Hence, that's the blow off top. That's what happened in 1929, by the way. It's what happened in .com. That's how you get the NASDAQ down 82% from its all-time high. So I do agree with that aspect of it. But the crypto bros, they took it to another level. A lot of you have been asking me to check out Mark Moss, right? I've never seen his podcast. I don't know the guy. But he went on Kitco this past week. So I went and watched the podcast. Now, Michael Saylor, Lee, throw this up. Michael Saylor has a 13 million Bitcoin prediction by 2045 after all the Bitcoin is mined. He has 13 million by 2045. And basically, from what I gathered, the basic math of that was the compounding rate of Bitcoin moving at like a 2x beta on top of the S&P, right? Now, for that to happen, no recessions, no crashes, no depressions, nothing for the next 21 years, right, to get this target. Well, Mark Moss went on Kitco, and Mark Moss said that that target's not bullish enough in his opinion, and then he validates his opinion with this. Lee, roll the clip. We'll talk about it on the other side.
But in my opinion, and you've heard this many times, and I just agree with them, that, you know, the Fed between the rock and the hard place, so to speak, there's no way out but inflation. And so if we were to have a recession, that just means more inflation. I made a video talking about how the Fed cannot, or the government cannot afford a recession. So typically when we see a recession, we see tax receipts drop by somewhere between 12 to 15%. They can't afford that. They're already running $2.5 trillion deficits. How do they afford that? And so really we're in the situation where all roads lead to more government printing and more inflation. And so while everybody is predicting this big crash, I've been sort of on the opposite side for about a year making videos saying that there's just no crash coming.
So understand, guys, what Mark Moss is talking about, and it's not a crazy theory, right? It's not crazy. I mean, it is in some regards, but let me just explain it, break it down a little bit, the way that I understand it. So because the US, in his mind, cannot afford a market crash, he says there's no crash coming, which we don't have to talk about the crash. Let's just talk about the recession. But the US cannot afford a recession, right? So they're going to keep printing money, keep inflating everything, and then the assets will just keep moving up. So he doesn't think we'll get a crash. He doesn't think we'll get a recession. He thinks everything's just going to keep moving up. And if you watch the interview, he says Raoul Pal has the same opinion. Obviously, I guess Michael Saylor, to some extent, has that same opinion as well. But I want to just put this out there to you guys. What is Bitcoin, right? What is Bitcoin? Is Bitcoin an inflation hedge? Some of you are probably nodding your head yes. How did Bitcoin behave in 2022 when we had 9% inflation? When the Fed was forced to raise rates, Bitcoin fell 75%. It was not an inflation hedge. It is a beta tech play. Okay. So here's the core problem I see with Mark Moss's theory, I guess Raoul Pal's theory as well, is let's just say on a premise level that they're correct. The Fed, the government will not allow a recession, let alone a market crash. They won't allow it, so they're going to keep printing money. What happens when you inflate the money supply? What happens when you inflate the debt? You get inflation, right? That's what literally the definition of inflation is, to inflate the money supply. You get inflation. So you would have to believe, and to me, this is the big hole in this theory, you would have to believe that the Fed, the US citizenry, global citizenry is going to allow inflation to go from 3% to 5% to 8%, and the Fed's not going to raise interest rates again and combat it. Now, we've had this experiment in the 1970s. The Fed would raise rates, the markets came down, inflation came down, the Fed cut rates, the markets would bounce, inflation would bounce. We lost the whole decade. As a matter of fact, the Dow made its all-time high in 1969, did not make a new all-time high until 1982. You lost the whole decade. That was the stagflation decade. So to believe this theory, I guess to have to give it veracity, this theory that we're just going to keep printing, not allow a recession, not allow a market crash, you're going to get inflation. Then you would have to believe the Fed's not going to react to the inflation and raise interest rates. And then you'd have to look back historically, what has happened every time the Fed has raised interest rates with the Bitcoin price action. And you don't have to look that far back, guys. Again, look at 2022. If you understand that Bitcoin follows the markets, you would understand why Bitcoin dumped in the pandemic. You would understand why Bitcoin dumped in 2022. You would understand why Bitcoin peaked in November 2021 with the NASDAQ, with the Russell, with the DAX. It is beta tech. That's what Bitcoin is. It's a beta tech play. So is it possible? Sure, guys. Lots of things are possible. What's the probability of a crash up in that sense? A crash up because the government won't allow that risk assets to fall or the economy to slow down to that point. Keep in mind the Venezuela example, their GDP is minuscule. It's less than one of our states in the US like Texas or California, okay? Their GDP is minuscule. When you're talking about a country like this, you have to envision the country, the economy here, like the Titanic. You hit the iceberg already. You're taking on water. The elites at the top of the deck, the sky deck, are eating caviar, listening to music, sitting there in their best cocktail attire. They don't realize everybody underneath is drowning. That's the US economy. You can keep it afloat by manipulating numbers. You can keep it afloat by lying to the citizenry of these countries. But ultimately, it will capitulate when it takes on enough water. That's the point of tracking economic indicators with 100% accuracy. 100% accuracy doesn't sound like it gets much better than that for all 12 recessions since World War II. And when we talk about a crash versus a recession. Understand there's metrics for this. We've talked about it many times on the channel. The average recessionary drawdown is 33%. However, the one thing all recessions have in common is the market has never put in its low prior to the recession, meaning you will take out 3,500. If the S&P gets to 6,000, that's almost a 50% drop just to get down below 3,500, goes to 3,000, it's a 50% drop. That's right in line with your typical market bubble drawdown. So I think you have to look at this from a realistic standpoint, and you have to look at it with every single indicator would have to be wrong for Mark Moss to be correct. Again, this is just the crypto bro version of what Wall Street sells you with their salespeople every day on Bloomberg and CNBC. Okay. Every single indicator would have to be wrong. The yield curve inversion, 100% accuracy, 3-month 10-year yield predicting all the recessions, the unemployment indicators, including the SOM rule, the 1% rule that will be triggered, the 0.6% rule that already has been triggered. They would all have to be wrong for this to play out that way. And could it happen for the first time in 80 years, every single recessionary indicator is wrong? It could happen. What's the likelihood of that? Well, I've mentioned this before, but to have 12 random outcomes all show the same binary outcome, meaning if you take a quarter, heads or tails, to get heads 12 times in a row, if it was totally random, the chances of that happening are 0.000122. Meaning, when you have the indicators with 100% accuracy, when you have the economic backdrop that you have, you can predict the outcome with a near certainty. It will play out just like it did all the prior times. And that's my base case, guys. My base case isn't anything crazy. My base case is the market cycle will play out the same way the market cycle has always played out. That's really important to understand. And so when you're listening to this stuff, just take it all with a grain of salt. 2045 is a long time away. If we get a big crash in the markets in 2025, if Bitcoin takes out its low or gets cut in half, then the same people can say, well, guys, I'm talking about 2045. That's a ways away. We have plenty of time to recover, right? So just understand that, because people that make these predictions of these crazy high numbers, it never works out historically in the near term, right? And you can always push it out to a further date. And as a trader, I don't care. I don't care what you think the Bitcoin price is 2045. I want to make money this year. I want to make money next year, and I want to accumulate at the bottom. And so my thesis, the premise of this channel is this cycle will play out the same way it has every other time, and there will be a much lower price target. We can accumulate all these assets and start building generational wealth. Lee, let's start the show. All right, guys, we're going to start off on the GFC cycle. Guys, if you want to join our Discord, get my extra market updates while we're still working on the new launch of the website, you can check out the link in the video description. You can message Lee in Telegram if you have any issues with joining at all. So definitely check that out, because we have a great staff, great members there as well. The GFC pattern, guys, where are we now? Again, here is the Jackson Hole event back in 2007. Here is your Jackson Hole event here in the modern market. And this is what's next, the rate cut, the same exact day, September 18th. Lots of odds are going up and down on whether it's a 25 basis point cut or a 50 basis point cut. Here's September 18th in the modern market. Guys, look, as recently as last week, the odds fluctuated from less than 20% we're going to get 50 to, I heard on Bloomberg today, an analyst say it was like 40% we're going to get 50. I've been saying for weeks, I think we get 50. Why? We got 50 in the GFC cycle right here. We got 50 in the dot-com cycle. I just think we could get 50. I don't know if it makes a difference as far as the veracity of the rally, but that's what I think is going to happen. Now, if you look at this, if you look at how the market behaved in 2007, you put in your low after the retracement, higher low, higher low, you drifted up, you got a little rally up, you made a new all-time high, it lasted for a day, then you got a 57% decline. Because we're setting up in our W pattern, which is what I told you guys I wanted to see the last video, I was talking about I wanted to see the pullback, we got the pullback. This allows you to slingshot up higher to a higher level. I'll show you on the daily charts, but this is how it's setting up. The rate cut September 18th. Look at that big, beautiful bar we got on that September 18th in 2007. I'm expecting to see prices rise across the board. Let's go ahead and move forward. If we look at the S&P, let's talk about these upside targets and how we can find them with Fibonacci. I went over some of this in detail on the Discord as well for our members, but I want to take my trend-based fib extension here, go down to that pandemic low when this cycle started. You can debate when this cycle started, okay? My base case when this cycle started was all the trillions in global stimulus that was poured in during the pandemic. So that's where I'm starting this cycle from. If we look at this with a trend-based fib, click the low, click your January 3rd, 2022 high, come down to your retracement level low, the cycle low at this point. Look at where your one fib takes you. That is 6,136. You might say, well, what does that mean? That's just a number, 6,136. If you look at this from a trading perspective, this is a law of three pattern, right? So this is a three-wave move if you look at it this way, an ABC move. So we can take our A, our B for our retracement, our C, this gives us an equidistant move, a 100% move off the low here would be 6,136. So in and of itself, does that tell you a whole lot? You want to look for Fibonacci confluence, right? If it was just as easy as doing something like that, it would just be very easy to trade. So I'm always looking for layers of confluence. So if we take our A wave with a Fibonacci retracement, come down to the B wave, look at where the 200% gets you right at 6,100. Look where the 1618 gets you. We talked about this on prior video lessons, right? You got up to the 5615. That's where you stalled out. That's where you had that 10.5% retracement in 3 days. And now you're trying to come back up and take it out. So Fibonacci confluence, you guys know I have other patterns that show 5,900, 5,900, 6,100. I'm calling it 6K, splitting the difference. That's what I'm looking at here for the S&P as an upside target. Notice where we fell to here on the weekly time frame. That is the weekly, what is that, the 50 or the 20? That is the weekly 20, I believe. So that's the weekly 20. We fell right to it for support, and that's what we're holding right now, looking for September 18th to give us our liftoff. You can see even on the weekly time frame, look at the W that formed, okay? This is the W that formed. We're going to look at these targets based on Fibonacci confluence on the daily time frame as well. But this is what I see happening with the market ultimately getting the 5,900 to 6,100. We look at this on the daily. Here's your W. I drew it out for you to save some time. We can take our measurements here as well from wave 1 down to the wave 2 down here. You can see the 1618, 6,092. Underneath that level, 5,884. Again, 5,900 to 6,100. I'm looking for an October top. Remember, in the GFC cycle, we rallied for 23 days with the rate cut. And the dot-com cycle, off of the low after the cut, we rallied for 23 days. I'm looking for an October top. Once we start getting this move, if we get the cut and we get the rally, we can start timing this rally out and narrowing it down to where it could be. That's the marriage of price and time. Be very important. But those are my target ranges for right now, 5,900 to 6,100 on the S&P. What about the NASDAQ? Let's use the same methodology. Let's take a fib extension here. Go down to the pandemic low, up to your previous all-time high, November 2022, down to your cycle low, right? I feel like this is prep for other people's YouTube channels. Down to your cycle low, and we got 20,623, right? Look exactly where we hit. We got wicks above it, didn't get a weekly close above 20,623, and then we got a very nice drop off of that target level, right? So we can pull this down, a 17% drop off of hitting this 100% move. And what is that 100% move, guys? Again, this is nothing more than an ABC move. It's a three-wave move up to this level. So the argument here to me is, will the NASDAQ come up and make a new all-time high, or will the NASDAQ just double top out, right? So we're going to look at this on the daily time frame as well. But as you can see on the weekly time frame, what did you set up? This is good. Your W pattern. You set up the W pattern for upside with the rate cut. Can we take out the all-time high and make a new all-time high? Let's look here on the daily chart. If we take a fib retracement from wave 1 down to wave 2, just like the S&P, the 1618 is up here at 23,228, a new all-time high. The 1272 is 21,971. We'll call it 22K. So 22K, 23K, both of those are new all-time highs. Could this stall out lower? Could it just come up to the 786, 886, not make a new all-time high? It's possible. The way that I'm tracking these markets in parallel is with the largest market in the world, the S&P 500, okay? S&P breaks out to new all-time high. We're going to see how the NASDAQ does. Base case, just like in the GFC, I think you're making a new all-time high, 22K, 23K, on the NASDAQ. Let's move forward to the next one, the DAX for our European friends. I enjoy trading the DAX as well. Let's do the same exact methodology again. Trend-based fib extension, pandemic low, up to your previous all-time high, down to your cycle low. Where does that get you on the DAX? 20,160. Do we have any Fibonacci confluence for that level? Yes, of course we do. We have multiple Fibonacci confluences for these levels. We can go to our previous all-time high, come down to the cycle low, 1618, 19,057. Where did the market get hung up? 19,057. The DAX is moving in confluence with the US market, specifically the S&P and the NASDAQ, and this will move up. So how can we also judge this on the weekly time frame? Go to your all-time high, down to this retracement level low, because they all sold off together. Where's the 1618? I know it's small, guys. You have to squint. Put your glasses on. 1618 is at 20,200. So you have confluence once again with 20,000 level on the DAX. If it was to come lower, 19.5. 19.5, 20K on the DAX. These are my upside targets. This looks like accumulation to me. This looks very strong. When you look at the DAX on the daily time frame, it barely fell below the 382. So just keep this in mind when you're looking at these retracement levels. Totally normal to come down to the 618 at 17,845. The DAX may sell off some more to set up this reflexive move, because ultimately, what are you doing with this move? You're just making a giant W pattern, okay? Whether it comes down lower or not, those are my upside targets, 19.5 and 20,000 on the DAX. So you want to watch those levels. If we look at Bitcoin, first of all, I want to draw your attention to this pattern, right? Everybody, not everybody, but the people that are really bearish on Bitcoin, they're talking about this pattern. When you look at this pattern, what did we hit here on our weekly? Our weekly 50s where we found our support. Look at this pattern. People call it a flag. People say it's bearish. It's going to melt down. How does Bitcoin previously act at all-time highs when it wants to capitulate? You typically get your spike, and then you get a quick movement down, quick movement back up perhaps, and then you change levels, right? You level change. You did that for certain right here. You got a spike up, you sold off, you try to hold it, boom, quick level change down, and then you capitulate it. This, to me, is accumulation. As a matter of fact, look at this pattern. If you look at this pattern, where did you just see this pattern? You saw this on the DAX. This same pattern played out on the DAX right here. Let me get rid of this fib so you can see it even better. The same pattern played out on the DAX, right? So here you have this descending channel, this flagging type pattern. And then what did it do? It found support. It broke out, okay? This is the exact same thing that I think is going to happen here on Bitcoin. Holding the 50 here, you're going to break out to a higher level, your next leg up. I don't think the S&P, the NASDAQ, global equities are all going to move up and Bitcoin's going to do this. I don't see that happening, okay? Again, just my opinion. I could be wrong. Daily time frame. When you look at Bitcoin here, if we just take this low, the retracement level low you put in here and put it up at that most recent high, you came down to the 786 at 52. You're well below the daily 50 still, which is hovering right around 60K. But again, this is all about holding your levels for the September 18th rate cut, which is right here in green on the chart. Bitcoin could lead, Bitcoin could lag. I expect with the euphoric explosion in the markets, crypto led by Bitcoin is going to move up. Okay. That's what I expect. You guys already know my targets. We've been over them many times. Let me bounce back to the weekly here just so we can talk about them one more time. We look at the weekly, can do this two ways here. We can go to our previous all-time high in November 8th, 2021, come down to your tracement level low. If we look at our 1272, we got to get past the mid 80s, 83.5. Then we have 102K up here. Do we have any confluence for those two targets? Again, all about Fibonacci confluence. Take your current all-time high, go down to that retracement level low, 98K, 102. Again, confluence for 100K. Of course, we have to get past the mid 80s. Okay. So again, this is going to move in parallel with the NASDAQ. If the NASDAQ can't get up to that 23K target, maybe it makes a lower high or just a slightly higher high, then you want to watch Bitcoin here in the 80s. And again, as we have candles, as we form patterns, after we actually get a liftoff, we'll be tracking this closely. Okay. But for now, you want to hold these lows. You want to hold your high mid 40s here that you held. We talked about staying above 54K. I thought was important. You dip below it, you got back above it. You're just doing this drift pattern. It's a drift pattern. This is an accumulation pattern. If it plays out with this cycle and we get this rally with the rate cut like we did the last two rate cut cycles and these two previous bubble cycles in the last 24 years. Okay. So that's what we want to watch. Now, if we move forward again, let's look at Sol. Sol is literally going sideways, holding its low around that 120 range. And again, what's Sol doing? It's keeping these highs in check right here. You see this? Here's your highs. Here's your base. Sol's doing the same thing. September 18th is right around the corner. This is a 3-day chart. I wanted you guys to see this. If we look at Sol, zoom out on a 3-day chart here. Let's just look at Sol. You can see you had your dip, right? You had your big sell-off. Again, this looks like a cup. You can call it a cup and handle, whatever you want to call it. And now you're accumulating, but I think you're going to lift off again for that final move back up. And again, when we look at this from a perspective of Fibonacci, again, some things are going to move better with Bitcoin. Other altcoins specifically may not have the same reaction, right? Some altcoins are going to be duds. Other altcoins may move more parabolically with Bitcoin. I think Sol's going to have a nice move up. You have to take out your 210 level. You take out 210, guys, then I'm looking higher up. I'm looking at 237 at the 1272, but the 1618 is what I really want to see hit 272. And if we get a parabolic move, a doubling of this range that we just measured, then you're looking at 310 on Sol for a blow off top. Again, we'll keep tracking this as time progresses. If we look at gold, guys, zooming out on the weekly chart, a couple of things. You had a gold distribution box over here back in 2011. Okay. 2011 is when you started. You sold off. And what was this? Long accumulation range. You changed levels, long multi-year accumulation range from 2020 all the way out to 2024, and you finally broke out. So let's get some Fibonacci confluence for targets, because I know you guys are seeing some crazy gold targets, gold 10K, gold 20K. Let's just look at Fibonacci. From going back to 2011 to your cycle low there, 1618 was 2461, right? Where's your 200% move? 27.95. This is gold futures, so $2,800. Do we have any confluence with that level? Because this 1618 played out pretty nice. You got up to it. You had some chop, right? Let's see if we have any confluence for that. So I'm taking a fib retracement, going to this next accumulation level, the higher level up, right? Let's get some confluence. And if we look at this from this candle down to this cycle low here in the accumulation range, look at this. Your 200% move was 25.35, which is where you're stuck. Your all-time high on gold. However, look at your 2618 harmonic expansion. 2820. So you have 2800, 2820. Again, I think the next level for gold, the blow off top in gold here before you get some retracement, is 2800. Why will gold retrace? It doesn't have to do anything, but keep in mind in the GFC cycle, gold fell 34%. Oftentimes, especially big money, big traders will sell their winners to cover the losses for their losers. Not only that, you will have profit taking if everything starts dumping. Think about a potential financial crisis. Think about a geopolitical event. But overall, gold should bottom first like it did in the GFC cycle and then go on its run. When will all the commodities take off? People ask me this all the times. Commodity cycles start at market bottoms. That's why you're going to see oil and everything else sell off as the top 3 economies in the world, US, China, Germany, all enter recessions. Energy prices come down. Commodity prices in general come down. There's always idiosyncratic stories such as coffee, such as cocoa, but overall they come down, they recover, and then they go on their cycle. Some people are calling it a super cycle. Think about it as economies expand, as they need more energy, as they need more food, as people are doing better, purchasing things, products have to be made. That's when you see copper, nickel, all your metals, everything start picking back up. That's your commodity cycle at a market bottom. So let's do one last bonus chart here, NVIDIA, because it was the big darling. It still has doubled this year in 2024, putting in this beautiful W pattern. We talked about NVIDIA on the Discord, also on the channel, coming down to that 100 level, and it came right down to it. I think this actually got to 100, did it not? Yes, 195. So when we look at NVIDIA, where could this go? Will it still have the oomph, the power that everybody thinks it will? I think it will, because people look at this, they're being sold day after day. AI is going to revolutionize the world. NVIDIA has sold off now from the 140 range all the way down to the $100 level. If we pull a fib from our wave 1 of our W down to your wave 2, 171 takes you to the 1618. Perhaps the NASDAQ doesn't do as well as the S&P as far as the new all-time high, 154. So you could look at 150 NVIDIA, 170 NVIDIA, and that's my 2 targets for NVIDIA. Watch the September 18th rate cut. Guys, I'll see you on the next video. Be sure to leave me a comment. I reply as always. I'll talk to you soon. Have a fantastic weekend.